Welcome to Tesla Daily News Podcast. Today is February 3rd, 2026. We're breaking down the Tesla headlines that matter for Tesla: autonomy progress and risk, energy momentum, governance wins, and the competitive pressure showing up in Europe. Let's get into the most stock-relevant developments. Story 1. Tesla just got a meaningful regulatory green light for full self-driving testing in Israel. Here's the hook. Israel's transport ministry has officially approved Tesla to run FSD tests on public roads. Context. For Tesla's autonomy narrative, the biggest bottleneck isn't just neural nets, it's permission. Real-world testing in more jurisdictions expands the training loop and builds a track record regulators can evaluate. Details. The approval is for controlled driving, meaning the system can operate, but with supervision and a structured testing framework. Israel is also a tech-forward market with dense urban driving, exactly the kind of edge case environment that's valuable for autonomy validation. Impact. For investors, this supports the bull case that Tesla keeps expanding the operational footprint of FSD globally. More geographies means more data and potentially faster iteration, both of which feed into the long-term valuation debate around autonomy software revenue and robotaxi economics. Takeaway. This isn't Robotaxis tomorrow, but it is another regulatory door opening, and that's what autonomy investors should track, where Tesla is allowed to run, at what autonomy level, and under what constraints. Story 2. Tesla's own robotaxi data is getting scrutinized, and the headline isn't flattering. Hook. A report citing Tesla robotaxi trial data in Texas suggests the crash rate is still materially higher than human drivers, even with safety monitoring. Context. Tesla's valuation has a wide range of outcomes largely because autonomy is either a massive high-margin business or a long, expensive slog constrained by safety and regulation. Details. The report describes an accident rate roughly 3 times worse than humans in the reference dataset, even with a safety person monitoring. It also ties into ongoing regulatory attention, including the way safety agencies look at incident reporting and miles driven. Impact. If the market starts to price a slower robotaxi timeline, you can see multiple compression pressure because investors have been willing to pay up when they believe autonomy is approaching a step change. At the same time, bear headlines can cut both ways. Tesla can respond by publishing more comprehensive metrics, improving safety performance, and using tighter geofencing or operational limits to raise reliability. Takeaway. Watch for 2 things: whether Tesla expands robotaxi operations without safety monitors in a credible, auditable way, and whether regulators push for stricter requirements. Autonomy is still a valuation driver, but it's also a headline risk. Story 3. Tesla Energy is quietly building a full roof-to-outlet ecosystem, and it's getting more concrete. Hook. Tesla says it has effectively completed an end-to-end residential solar ecosystem: panels, mounting hardware, inverter, Powerwall, EV chargers, and the vehicle. Context. The energy business matters because it can diversify Tesla away from auto cyclicality and potentially deliver stronger margins over time, especially as storage scales. Details. The report highlights new solar panel and mounting components integrated with Tesla's inverter and Powerwall. The pitch is a unified system rather than a patchwork of vendors. Tesla is positioning this as simpler to buy, install, and operate. Impact. Investors should care for 2 reasons. First, attachment rate. If more Tesla vehicle owners add Powerwall or solar, that's incremental revenue and stickier customer lifetime value. Second, grid value. Distributed storage can become a software-driven asset over time, especially where virtual power plants are allowed. Takeaway. Tesla Energy doesn't need to beat auto to matter. It needs consistent growth, improving gross margin, and fewer installation bottlenecks. Any signs of smoother delivery and scaling can move sentiment. Story 4. Giga New York is reportedly ramping solar panel output to about 300 megawatts per year. Hook. Tesla's Buffalo factory, often discussed for years with mixed expectations, is being refocused toward higher solar panel production. Context. Solar has been a choppy segment for Tesla historically, partly due to prior strategy shifts and the operational complexity of installations. Details. The figure mentioned is approximately 300 megawatts per year of solar panel production at Giga New York. Impact. 300 megawatts isn't a game-changer by itself versus Tesla's total revenue, but it matters because it indicates operational follow-through. If Tesla can pair manufacturing output with a more scalable sales and installation engine, solar can stop being a question mark. Takeaway. For Tesla, the energy story is increasingly about execution and consistency. If you see stable ramps in Powerwall and Megapack alongside solar supply, analysts may start modeling energy as a more reliable growth pillar. Story 5. A Delaware Supreme Court decision just reduced legal fees in the Tesla director pay lawsuit by more than $100 million. Hook. Tesla scored a governance and cost win as the court slashed the fee award owed to shareholder attorneys. Context. Legal overhang matters for Tesla because lawsuits can become recurring noise in the stock, and governance optics influence institutional appetite. Details. The ruling reduced the legal fees by over $100 million. Impact. Direct financial impact is one part, but the bigger investor angle is uncertainty reduction. When legal issues de-risk, it can improve the risk premium investors demand, especially for funds that are sensitive to governance headlines. Takeaway. This doesn't erase governance debates, but it is a tangible win. If you're tracking Tesla as a long-term holding, fewer legal distractions generally supports multiple stability. Story 6. Europe continues to look like a pressure point. January registrations reportedly weak and market share still shrinking. Hook. A Reuters-cited report says Tesla's January European new car registrations show little rebound and ongoing market share erosion. Context. Europe is one of Tesla's key battlegrounds, and it's getting more crowded, both from legacy automakers and a growing wave of Chinese brands pushing aggressive pricing and high-feature content. Details. The key point is direction, not a single month. Registrations as a sales proxy are described as soft, and market share is portrayed as continuing to shrink. Impact. If Europe stays weak, it can hit investor confidence on two fronts: volume growth and pricing power. And pricing power is tightly tied to automotive gross margin, which the market watches closely. Takeaway. For the next few weeks, watch for pricing moves, financing incentives, and delivery lead times in major European markets. If Tesla is losing share, the market will want to see whether it's a demand issue, a product cycle gap, or a deliberate margin protection strategy. Story 7. The Musk empire consolidation rumor moved the stock, and it's worth unpacking. Hook. Reports that SpaceX has discussed a potential merger with Tesla or XAI ahead of a possible IPO helped drive Tesla up more than 3% last Friday, closing around $430. Context. Investors are always trying to understand how Musk's companies interact, capital needs, talent sharing, compute and AI infrastructure, and potential conflicts of interest. Details. The market reaction was clear. Tesla rose about 3.3% on the day, with an intraday move that reportedly reached the high 430s. Impact. A merger concept can excite bulls who see synergies, shared AI, shared manufacturing culture, and a stronger combined story. But it can also raise governance questions, valuation fairness, related party dynamics, and whether Tesla shareholders are taking on non-core risk. Takeaway. Treat this as a sentiment catalyst until there are concrete terms. If anything becomes formal, the stock reaction will likely depend on structure, who owns what, at what price, and how Tesla's cash flows and focus are protected. Let's close it out. Today's big themes were autonomy expansion versus safety scrutiny, energy execution getting more real, governance de-risking in court, and Europe remaining a key demand and competition test. For tomorrow, watch for any follow-up from regulators on Robotaxi safety metrics, any Tesla commentary that clarifies Europe demand, and whether the SpaceX plus Tesla consolidation chatter turns into something more than speculation. If you want this kind of TSLA-focused, investor-first breakdown every day, subscribe to Tesla Daily News Podcast and follow us for your daily update.